Hi, Warriors. How's everyone doing today? Ingmar, Michael Weissman, how are you, buddy? Brand's monitoring by phone. Thanks for letting us know how you're watching us. Paul Penman, Ryan,
Hey mate.
Globals. Huh?
Hey
Go ahead.
mate, are
What?
you right?
Yeah. Uh, yeah. Okay. So we're getting Ryan saying CTA positioning the highest level in 8 years. Okay. Thank you. Yeah, not many beers. James, AJ, Kman, Laura, Patrick. Okay. So Ryan, before we get to what happened in the end,
We're
which,
not talking about the yen. We're not allowed to talk about it today. We've all got the
okay.
ump.
Okay, so what I think this was important yesterday. So, everyone's crazy with AI and NVIDIA chips. NVIDIA peaked on its earnings, didn't have such a great day. This was a pretty weak rally, even though the S&P's pressed new highs. But I think what was really significant is AMD came out with news that they too have these AI chips. Some people say they're even better quality than NVIDIA, and this is how it opened. I mean, it opened with about a $7 gap, and this is how it finished, back at support. And what's interesting about AMD compared to maybe the Mag 7 or so is how it's performed over time. So, we haven't gotten close to the top that we put in 21. Okay, we had this and we had this bounce, and this could be a failing rally from it got up to 78.6 of this decline. It's not going to be a good week unless they turn it. And why can't we see 100 in AMD? Or if it breaks at 80, so, that's got a pretty negative picture. Amazon doesn't look so great. There's a potential 2-week reversal, also at a fib retrace of last year's decline, maybe a little 1, 2, 3. So beware. I think if we're going to get this breakdown in S&Ps, there's a weekly. We're right at the 2-week off number. Everything's going to be decided whether I'm all wet or there is something brewing for at least a counter trend trade. And I saw it across industry sectors. Okay. So I showed you some tech. I could show you almost,
Before you jump over, can you have a look at Alphabet? Because they
sure.
unveiled their latest AI offering, which apparently was
Okay.
was very
All
very
right. So they're
complicated.
up,
Yeah,
they're coming
full
in
cut.
three better. Was that a new
Yeah,
announcement from today?
their Gemini, whatever it is, AI model
Oh,
thing, a
Gemini.
bit like, and
I'm
they
a
had some
Gemini.
examples. It looked pretty. We're pretty much one stop from Skynet now.
Oh, okay. So
So
I don't know. It doesn't look great to me, you know, making lower highs, you know.
yeah,
In fact, I could go through all the mags. Look, I mean, what do you think of this chart? Look how it closed. I mean, it looked okay and then just rolled over. I think yesterday was an important day. I mean, got some pretty negative signals. So there's Netflix. Here's Meta. That doesn't look so great either, does it?
no,
I mean, so they all look vulnerable. And what was interesting is the narrative on CNBC now is that people are trimming their Mag 7 so they could buy the out of favor stocks next year. And,
yeah,
like the market will accept weaker Mag 7 and the rotation is going to drive the next rally. It won't be these leading on the next rally. That's what I'm hearing on CNBC.
yeah.
And you could go across a lot of different sectors that aren't even related to tech that don't look great. Like, I don't know, do we have some news coming out here pretty soon? Or can I
Uh,
go through with this?
no, no, nothing. Nothing.
All right.
Jobless claims, bottom of the hour. That's it.
So I'm looking for, all right, here's Freeport, right? Different industry. Look at that. So this was a copper rally. This doesn't look too good. Looks like it just rallied back. Got another false breakout here. Or back under the 200-day. So
you're thinking a reallocation out of the Magnificent Seven into other stocks, which should be healthy, shouldn't it, for indices in general?
It should, but maybe we get a correction while this rotation is going on. Walmart got killed. All right, so there is across a lot of different industries and sectors. Even cat. I have cat and deer up here. Look at cat.
Yeah, that's a good bellwether for global growth, isn't it?
Yeah, and deer. So anyway, take it with a grain of salt. Even some gold stocks look like they could make a new low. And you know what? I'm not that bullish of gold stocks because when you think about it, think of the move we had to have in the shares to get just a little pop and things like this one I owned for a while. What's so bullish about that after record-breaking highs in the gold? And it just looks like a 3. So, I mean, here's the blue chip golds. They look a little better. They had a little nicer run, but, if 30 was a breakout, we're on the verge of negating it. Maybe it holds down here. But there are some golds that look like they can make new lows. So
that all says to me that the actual move in gold is more speculation than demand. If it was demand, you'd see the miners going up.
Yeah. So back to 2050, see what it does there. But I'm starting to think that, we could see 1950, 1900 in the weeks ahead. I think a lot of things will be better buys in January after the tax selling's out of the way. And, I don't care if you're long-term bull or not. I think this can be tough to overcome. It's going to take at least sideways action, right? Have either time or price correction because guys are calling this a completed wave. So this doesn't mean that we're going to have a bear market. It means we'll just go through a corrective process. Anyway, that's my take on stuff today. What's the feat? You don't want to talk about the yen?
No, don't want to talk about the yen.
He wants to talk about the yen. He's
Maybe
going to talk about the yen. You just got to pry a little bit. He's just pissed because he's not in it. Right?
Why did
right? Do I got it right?
Yeah,
it's an aggravating business, man.
Been saying it all week, haven't I? I've had an itch.
You know what?
Longer.
Trading is like golf. Who else gets aggravated on the golf course?
It's a love-hate relationship.
Yep. Anyway, okay, it's like golf, so I gave up golf. Anyway, all right. How about the Europeans? Some of the counts that I, became aware of coming into this week had the dollar rallying up towards 420. I think we got there, didn't we? 423. And then, looking for new lows before there's a better bounce. So maybe we should be buying euro. Aussie got to your number, right?
Yeah, I'm not talking about the Aussie either. Got right down to the number. Slept on the
there
bell when I was asleep.
Yeah, I know. I miss a lot of things when I'm asleep. So, CAD doesn't look bad. I don't know. No. Anyway, I'm ready to, to me, I think one of the most important things that happened was yesterday's action in the stock market. Let's see if I don't know. I'm thinking a strong report would be a surprise, and the market wouldn't like it. I really underestimated. I thought that the TLT was going to start correcting at the 92.5 level. Look at this. Well, now we're at a 200-day. talked to a guy yesterday who says this is a risk-off rally. I said, well, the market's not caving. He said people are buying this because they're afraid of the risk in the market right now.
Don't know about that.
But advisors are so bullish. That's what one of our attendees said today. So that's it. People are betting on a slowing of the economy, and they're not going to get these rates again for a long time. You have any comments on yields, Kman? Good morning.
Good morning, Dale. Good morning, everybody. No, not really. It's all going to depend on tomorrow, right? I think it's tough to make a big call on the yields. The only thing I can see is when I put some trend lines and some horizontals and some retracements. We are, if you look at the tens, we are. I've got one. If you look at the move really from 3.25 to 5%, the 50% is at 414, and we are hanging around. So yeah, I think tomorrow is going to be probably more of a decider because the job market is such a big domino. It's probably going to be more of a decider than perhaps the FOMC may be next week. So
yeah, maybe it lights up a recovery back to 460. That would shake out a lot of the bond bulls.
Yeah,
correct. That'd be a nice correction, and then it pukes again.
Yeah, I mean that is something that people should perhaps be more wary about than whether we are going to test 4% or so right now, because that is now all expected. People expect the yields to continue to come off.
I'll go to Ryan's favorite time frame, and
what the 15 15 minutes? Okay.
Yeah, that's his favorite. That's not a chart I'd short.
No.
Right, Ryan? You're the 15-minute guy. And I know your wife is very grateful.
Yeah, his wife is looking at 5 minutes.
You're 15 now.
Huh?
He's looking at 5 minutes.
I haven't gone 15 since I was 15. Anyway, go ahead, man. What's this chart look like to you?
It's identifying what's happening, at least in the short term. Yields are looking a bit higher. We're bouncing a bit. But the bigger levels, it shows the intraday moves anyway, but the bigger levels up towards that 420 mark. So 410, 411, 420 at the moment.
I used to look at them, but when I found out that you did too, before I pulled the trigger on a trade, that may be lining up for me on a little larger time frame. I go here now. And if I see like confirmed highs and stuff, and I want to be short, I tell myself to be patient and wait for a high not to confirm.
Yeah, I found the 15 minutes are good enough to take out the short-term noise, from the lower charts, but long enough that it gives you a good overview of what's happening any particular day or the last couple of days. So you can see where the support and resistance is developing, and then you match that, like you say, to your other charts.
Yeah, when I was starting the business, I'd watch these. Oh, look how illiquid these bonds are in the aftermarket. I would trade the 1 minute chart.
Wow.
So every decade since, I've increased the time frame. I'm now watching 3-month charts. Anyway, WTI finally a bounce, but a lot of damage done in the last few weeks. Still looks like it wants its line. I think it's around 62. See this?
Yeah.
So
bounced off your MA there, though.
Yeah, it's and that's the 200 week. at 70. And the oil shares have been the weak performers in the whole market. Okay, so and people made a fortune in them last year, so it's hard for them to give it up. But XLE, here it is. Once it broke down under 84, that chart doesn't.
Frederick's asked an interesting question. If you see it, Dale, in the chat about gold. I don't know if.
Okay.
I was only a wee nipper when that happened, so you might have better insight.
Okay. Some gold stocks went down. Yeah, I think you really have to be selective, Frederick. I don't think we're going down another 70%. Maybe another, 20, 30. Like that BTG could make a new low.
So I also think you're talking about a different era in supply. There's in theory less supply now than there was then percentage-wise.
Yeah, there aren't a lot of new gold mines coming on either. I mean, there are, it's expensive. But yeah, I just think that some of these can make new lows. I don't think, here's one that's on my radar for next year, and I've showed it here a lot. Now, I don't think this will make new lows. Okay. But there are some that will make new lows that I think is going to generate some kind of fib retrace. I even think silver's going to 22.5. So I don't think this one, which is what is it, Fortuna, will make a new low. But I used to trade this too, and look how ugly it is, Endeavor. So the gold stocks way underperformed. I think a lot of people don't have money made in them, and they'll sell them for tax losses. But I think next year is probably the year. So
next year is going to be a hell of a year, Dale.
Oh God, Blake, I don't even. I know what you're thinking.
Well, hey, we've got weekly unemployment claims coming in about 13 minutes that we need to cover. Do you mind if I take the screen, my friend?
Not at all.
All right, I'm gonna force Ryan. You are officially gonna have to talk about the yen. If you guys haven't caught this move in the yen, we've seen a sell off, and we're basically at channel support right now. Really key support, but there were some comments that came from the BOJ, and from what I understand, the JGBs really moved aggressively. If you're not going to talk about it, I'm going to ask Kman. So
I'm happy to talk about it always, but God, let Kman do it then.
All right, Kman. So what do we got here? So we got the dollar yen that has pulled back to, like I said, it's pulled back to support. Big breakout points here. What do you think the market should be doing at this point with the aggressive move that we saw finally below support?
That kind of question was not in the contract. You said what happened. Let's talk about the yen. Now you're asking me what people should do? Oh, come on. Basically, UEDA is the first time where we really said, okay, they could take yields into positive. I think it took the market a little bit off guard. Of course, we've seen big breaks in yen crosses as well as the dollar yen. I think we're going to find yen deep buyers now. Likely more medium term, perhaps not yet the real long termers, but the medium termers are likely again lightening up the books, and I haven't got much more to say. We have seen those kind of moves already in the past, where you do 200-300 points, and then the next BOJ meeting, he says, "Well, hang on a bit, we are not yet there. I told you we're going to wait for the wages," and the thing trades back up to 148. But I think for now, at least into whatever may happen, and especially as well into tomorrow, because there's a risk on the NFPs, we're going to find yen deep buyers for sure. And looking at certain crosses like Euro yen, Aussie yen, sterling yen in a way as well, they've all put in this time major breaks.
Yeah, they have put down some pretty big breakdowns. I'm going to go ahead really quick and just take a look at the, oh my gosh, that's a big move. Woo. Wow.
Yeah. I mean, and then after the move happened, BOJ already announced that they will do an unscheduled bond buying tomorrow. So
wow. Okay. Well, some big moves there. So the yen obviously is on the radar. Yesterday, I met with Chris Weston of Pepperstone. I did the weekly trade-off show with him, and I was just discussing, if the data is weak, I do want to be short dollar yen. Now, obviously, we just seen this big move happen. It was shortly after I got off camera, actually, and I still believe that if you do see yields fall, this dollar yen, it's going to crack some pretty major levels. I mean, you look at this as a big channel we've been following the whole year of 2023, and 50% retracement, horizontal support. We're there, and I have to admit, it's trading really heavy. I'm obviously watching it. I just covered up the remainder of my yen longs, which was a New Zealand yen short, but looking at that, I still want to be on the short side, just obviously don't want to be chasing down here. It's a very interesting move. What else is really interesting today is we're seeing that euro find support, really critical support around this breakout point. This is a huge pivot that's been a pivot since the summer. I covered up all my euro shorts yesterday, the remainder of them. I still want to be short euros, but we do have, between the jobs report and weekly unemployment claims, there's a risk of some volatility here. So with that being said, we are heading into the end of the week. Ryan, what are your thoughts here as far as what we should be, the traders should be looking at right now?
Well, obviously we've got a bit of jobs data coming up. We've got obviously the jobless claims coming, and obviously NFP tomorrow. So it's going to be a pretty big day tomorrow, because this what's happening dollar yen, like you're saying, waiting for weaker data. That's great, but the BOJ's just pushed it the path of least resistance as well. So now there's two winds blowing. There's what the BOJ's doing, which had been off the burner for a lot of the market, and now it's front and center, and it's what the market was doing with Fed rates expectations anyway. So this data is going to be about the last minute expectations for the Fed. Will they be hawkish? Will they be dovish? So on and so forth. So I think right now dollars are a bit of a rally sell, particularly against dollar yen, and that's the way you got to play it for now.
Yeah, and I was just showing you guys the continuing jobless claims. This is I know everybody's looking at the weekly jobless claims, which are 222,000 the market's looking for here, but the continuing claims, these are the ones that are kind of getting everybody's attention. You can see how they're coming in weak, and then they have been coming in weak every week pretty much for the last 2 months. And so those continuous claims just telling you that people are looking for work, not finding work, and that's inching up. So I think the jobs picture, even though we're still creating jobs, there's going to be some variables this month or tomorrow's data with a lot of the auto workers and what had happened with SAG, strikes and everything else. The fact of the matter, it looks like the data is starting to weaken, and we're starting to see the U.S. labor market show some weakness, and we'll see if it starts to get worse in the months ahead. But you're right, it's going to be really important data. Kman, how are you feeling today? And what are your thoughts going into today's trade?
Well, today, I'm not particularly doing much. I also covered my euro dollar shorts, by the way, from close to 110 today, because we are in this zone 107.35.70. And we are nearing decision time, I think, on the level and then for tomorrow. So I'm not doing a lot today. I'm just trying to reinstall or reinstate a very small short Swiss position. We've had another surprise to this morning that where the S&P FX reports came out, and they are still buying Swiss franc. But I really think that we are at the end of that. We will see next week S&P, but the Swiss is really getting on my radar here, especially if we start to see finally some hints at it, the string being over, then I reckon the Swiss is one of those currencies that has a lot of room to weaken. But of course, we have to wait for Mr. Jordan next week to really confirm. For the rest, I'm going to keep things light into tomorrow's jobs report, because the importance is big enough, in my opinion, to be a big driver for what's coming next. If euro dollar breaks 107.35 and holds below, then there's another 1% in there, I reckon, down to low 106s, 105s perhaps. But in the meantime, we have to respect that level, and that's what I am exactly going to do.
All right. Yeah, and I was just, speaking of the Swiss, I was just giving you guys a little bit of a free look here of inside of our community. Chart on the Euro Swiss, false breakdown. Look at relative strength on the Euro Swiss. Really showing a reversal here. It speaks into what Kman's talking about, so I think it's worth noting. Gosh dang it, I'm trying. I'm sorry, I need to move this
when was
thing
that
over
published?
Here. When was what? This chart?
Yeah.
Approximately 10-20 minutes ago. I put it in there just as you started this morning. Yeah. So
we actually tagged exactly, or to the 0.1 pip. We tagged the prior low in Euro Swiss this morning.
Yeah, and I'll tell you, maybe some people don't. If you were watching the trade off last night, one of my setups is the euro sterling, and I'm long, and I bought this yesterday. So I'm buying it, down at these levels, and I'm seeing the euro starting to look constructive against a lot of different currencies. You got the euro Kiwi that's holding support. You got the euro Aussie trying to hold fiend off this sell off. And Kman, you were just saying that the euro Swiss, I saw it as a false breakdown, but maybe
actually you have to go back to September 2022.
Okay, well,
exactly the same low. Exactly the same low.
September 2020.
Yeah, there, you had it. There, up there, it pops up. That one.
Oh, okay, yeah.
Exactly there. Tagged exactly it.
Yeah, my feed was showing pretty much. I mean, it's everybody's feed's going to be slightly different, I guess, right around there. So yeah, okay. And maybe that's it. Yeah.
Looks like you have a 3 drive developing there in the Euro pound, Blake.
On the
shorter
charts.
time frame.
1, 2, third.
Didn't quite get there. Doesn't
Didn't
have
quite.
to, but that's a 3.
Got it. Well, one of the things that I'm playing into, and some of you all know, is the double top in the pound dollar. So that still has some downside targets. It's underperforming the euro today. So anyway, looking at some of the euro crosses, they've had the absolute. Oh shoot! I just realized what time it is. We have had an absolute breakdown, or beatdown, excuse me, in the euro crosses. I'm going to pull up the data flash from ForexAnalytix. Let me just pull that over, and let me put this over here. And how much time do we got? And I'm sorry, this dollar yen needs to be on a 15-minute chart. That's my bad. So here we go. 5 seconds. 5 seconds. So here's the S&P. We have yields to the right and jokers to the left. I mean, dollar yen to the left. Sorry. Data. Look at the continuing
continuing.
claims. Better. And revised higher. So the dollar should firm up on that news a little bit, you would think.
Which it is. Dollar yen back above 145 by a little bit.
Are we really doing like zero? Is this I mean I guess everybody's waiting for non-farm, eh?
Yeah, there's nothing in those numbers to shake the boat.
Yeah, I mean it just seems to me that everybody is
book
just
squaring day.
Yeah.
All right,
just
you know what, we're paid to wait. So I know everyone wants to be trade. But you don't have to today. Just you can wait to react to the reaction tomorrow.
Yeah, and I think
it's
that's
roulette before that, isn't it? Anyway, Blake.
What's that?
It's like roulette, binary anyway before the number.
And unless you're pre-positioned, like if let's say you're short euros from like yesterday, I've been short euros from the last couple of weeks or a couple of days, excuse me,
right.
Near the 110 level. Closed everything out yesterday. I could have managed half of that position, but
right.
It's like end of year. Screw it, I'm going to take it off. But I understand if some people are hanging on to a portion of their trade if you were short euros from above 109. I get it.
You don't do anything new today.
No, because why stick your dick out right now? I mean, why you know what I'm saying.
Even if you have gas. Right, bro?
I'm hoping I get a giggle from some of you guys at home. All right. I want to thank everybody. I want to thank everybody for being with us today. Dale, thanks for guiding us. Kman, I hope you're feeling better. I know you've been a little under the weather, so I hope you're shaking that off. And Ryan, damn it, you're going to talk about the yen tomorrow, whether you like it or not. And I'm forcing it down your throat.
Yeah, I'm going to buy a cat this afternoon so I can kick it.
Even a dream team, even the dream team can have days where they just don't have a lot to say. They're dreaming the next plan.
He's just pissed. He is just pissed right now.
It's aggravating.
I'll be over it.
He's a
hey, you know what, Ryan?
Cranky wanker.
Probably too cold to go out to the driving range. Take it out on the golf ball, huh? All right.
True.
All right. Well, thank you guys. Kman. I hope you feel better. Get some of those emergencies, those little crystals you put in the water, lots of C and D. Whatever you have, it should help you.
Thank you.
Okay. And Ryan, you better talk tomorrow, man.
I can't. I'm off tomorrow, so no.
I was wondering why you were going to be here for almost a full week.
Go on, you get going with your interview, mate.
All right, buddy. How you, Daniel? How are you, buddy? Welcome back to F.A.C.E.
Thanks for having me today. How's everybody doing?
Good to have you, Daniel. So what's got your attention? So many things, huh?
Yeah, been kind of been monitoring over the last couple months this unwinding, if you will, of the big inflation trade that we saw for the last year and a half really play out in the commodity markets. And for those that don't know me, I'm Dan Hussey from Zaner Ag Hedge. We're a boutique brokerage firm. I help my clients manage commodity futures risk and futures trading. And one of the big things in our mainstay of clients are in the energy, metals, and agricultural sectors. In the last couple of years, we've seen these big run-ups in all of those markets.
Before we get going, Dan, is that your graduation picture?
No, that's not my graduation picture. I'm not that young, but thank you.
Okay. Anyway, I was wondering.
Yeah, no, it's a good. We had some headshots made up. I have another one that we did too.
All right.
To help with our social media presence.
Yeah, you're probably going to get discovered on F.A.C.E, and someone in Hollywood will offer you a contract so that you can supplement your trading account.
I would always looking for another hustle.
Are you referring to the action in precious metals on Sunday? We basically went parabolic in gold and silver and then put in these key reversals.
Yeah, and that move and break above that, kind of triple top that we had building on the gold chart. This is a gold futures chart, continuous contract I've got up. That triple top there into that 2080 area that finally, thought that was the big move. And boy, what a head fake that has proven to be. Interestingly enough, right, we're coming down into channel support. And a little, second in a series. So if we did 2 steps forward, halfway back here in 1935, we kind of did 2 steps forward, gapped up, and have now walked back, 50% into attempted a gap fill, trendline support, and maybe that 50% back from, the lows of November there through the highs of December, that spike high. I'm not saying that gold is an outright buy right here, but an interesting place technically to be defending on the chart on that pullback to test what was old resistance and a gap fill open, now is support. If gold wants to establish itself above 2050 but below 2150 right now, I think gold has been honestly kind of one of the later movers here. We saw, in terms of the inflation trade I was talking about over the last couple of years, we saw other markets really rocking and rolling more so than gold and silver. And it's been very interesting to see how well gold and silver have actually held up in this period of financial tightening, right? Where we've had the Fed raise interest rates, as fast as they did, in ever, certainly in my lifetime, and certainly we got to go back into the early 80s for a period where they're maybe, just as aggressive or something that caliber. Anyway, point is right, all of that was done to try to quell some of these runaway moves in markets. And it's interesting that gold is just, in my opinion, starting to break out of some of the levels that we've been kind of waiting and anticipating for 2 years of this inflation talk and discussion, right? Gold's always been historically that hedge against inflation that the market uses, because it's, not denominated in any one single currency, right? And can't be debased in theory. But nevertheless, gold kind of trying to make it for a breakout there. At the same time, kind of flip gears here and look at the dollar index, because I know we were just talking, you guys were just talking the euro currency there. A little fight in the trend. It's yes and no, right? I think this last year we were in a bear trend, right, into third quarter of 2023 there, and then something shifted, right? The Fed, something shifted in July, right? That we saw a pretty one-sided trade in the dollar and some short covering, and right back up into yields certainly rallied and have now since then started to break apart. But that market has now traded, the dollar index has now traded up into that 50%, off of its high from the 114 and change highs down to that low in September or July, excuse me. That 107 area was a 50% retracement. Well, the market has also pulled back, to be fair to the bulls, into a 50% retracement. Exactly, into the similar type of supportive area to that resistance that we talked about.
So do you have to have a bias to take a trade here now, since you have both of that, evidence of why it should decline and knowing why it held? Is this a rally to sell? I know some people were calling this a little ABC to 104.20, and we're going to be on our way to take out the 102.40 low, or the 61.8 level that we held.
Yeah, and I point out that chart of gold and dollar index right now, because while they're at very different points in their maybe daily and monthly charts, I think intraday over the last couple of weeks, they're starting to move a lot more in depth and in step here. So watching the dollar roll over from this blue line, which is the 100-day moving average, it's almost 50 back from the highs at 107 down to the lows there that we had recently too. So you got 55 in 100-day moving averages that we're running up into. We're just testing above the 18-day moving average, which is usually a very short-lived thing. If we're establishing a new downtrend, this red line, we'd expect us to get right back below. Just like, hey, when we came back above it for the first time here in July, we flirted with it a couple times at momentarily wherever below until we finally rolled back below it. It's a good daily trend indicator that I like to use. And we're all still really just flirting and trading around the 200-day, which tells me that, hey, over the last 200 days, there hasn't been a trend on the dollar, which is pretty clear when you look at the 107 to 100 range that we've generally been in. And so it does, I think, take a bias to really take a trade here, because technically speaking, you have two sides that are at play and both sides that are in a wrestling match. I personally have a bit of a,
Daniel.
I have a bias, a little bit of a downside for the dollar here, and for maybe, you know, that support and the gold that we just looked at holding as well. I'm watching for both of those things here. Stay below this 104.20 high and stay above that 2020, let's call it, low from 2 days ago in gold. Both those levels holding, I think, could mean, you know, a short-term weakness in the dollar and strength in gold go in lockstep for a little bit here.
How about the US dollar yen falling apart?
Yeah, probably a reversal that has been a long time in the coming. Get that chart up here for us. And when I say a long time coming, I mean the dollar yen for the last 10 years has been in some swings that have all been in a long time coming. If you go back 20, 30 years, right, we're unwinding a one-sided trade in the dollar yen that, for those that don't know, began back in the 70s through about 2012 when the yen was depegged. It pretty much traded from $350 to yen to the dollar down to about 70 something. And a daily chart's just fine here for what we want to look at. There we go. So coming up for a second test there of multi-decade highs here at 150, 195, and getting rejected, but still very much being inside of, just generally speaking, I think a channel higher here in the very near term. Well, no, actually today is the day, I guess we're breaking that channel support, aren't we? So the technical drivers of what kept the market up, going up, the trend lines, the channels have broken. Full 50 back from the low of 127 up to 151 will be an interesting level, but my concern with the 140 level and really anything between 151 and 127 at this point is that the market has proven 3 times now, you know, once in a rally up to that high, another time in that first pullback, and the third time now all the way back up, that it can transverse this range with pretty easily over the course of 6 to 7 months. So I'm not saying we could trade all the way back down to 127 to 125, but boy, if I take a step out to that daily time frame, anyone that's a fan of Elliott wave might see this as a flat chart with an A, B, and now a C leg down in the works, which 140 will be interesting to see if support and things happen in that kind of technical area. But I don't know. I don't know if I could. It'd be tough for me to be a buyer here in the dollar yen until we've established some kind of reversal off the low end of the 125 to 130 area of the range that we've been in.
Okay. Any bottom in sight for WTI, Dan?
Oof. You know, we've been really watching and monitoring the what the government has been telling us about when they're going to be refilling that SPR. 65 to 70 was a level that has been widely talked about and narrated that, hey, there could be some support from the government, right? You know, actual government intervention trying to refill that strategic oil reserve. I like to point out that crude has been in, you know, a fight between 2 really big levels right now, similar to that dollar index chart that we looked at. Big 50% from basically 2020 COVID March of 2020 lows to the highs after. 50% around 68 has held. That was also a cluster of old highs and, you know, support, you know, an influential, or an area of confluence that had a lot of highs and lows and fight over the trend in 2021. We came back down to test that area now as support, wanting to make sure we stay above it. Been a pretty choppy move to the downside all around in crude. Something that has caught my eye, though, is that, you know, 50% from the highs to low here at around 97 almost traded, almost got there. That was also the lows there from that initial pullback off the highs that we broke below back in early 2023, that we came back up to test, you know, broken support now as resistance, right? So it's, you know, we fell off from an area that was, like, technically speaking, could be a continuation level. Also, maybe that trend line off the highs, right? The original one. So crude rolling over from where it did wasn't entirely surprising to me. What was surprising to me on this first pullback was actually we didn't hold any support around this cluster of highs. I mean, it was multiple months of highs around this 82 area, which is almost a 50% retracement, right, from the lows to the highs around 80. That 80 to 82 area I really thought was going to hold on the pullback. It gave way. We're now holding below it in this trend channel lower. I mean, it's hard to call crude anything but a trend down until it's not. That doesn't mean that I'm not cautiously optimistic and thinking, hey, the bigger supportive area somewhere in the 68 area is obviously proven itself in the past here, into the end of 2023 here, or no, sorry, through the middle of 2023 and into the end of 22. But support needs to prove itself before I can really get excited and get long. Now, I'm obviously looking dollar short in the Dixie, maybe gold long. So it would make sense that if crude wants to bottom around here, that, and I see signs of reversal, that I would maybe think about getting long. But at least intraday, with the lower lows and lower highs we've had over the last week, and hey, this is the 1, 2, 3, 4, 5. This would be the 6th-day lower if we continue lower. You got to respect that and kind of wait for that reversal setup intraday to really get behind it. But I think we're down into the area that if you see signs of a reversal happening, you know, I can make a good case for how and why support could be at this area. I just can't step and catch a falling knife, right?
Okay. Can you catch a falling knife and that a bottoming formation is completing in the grains?
Well, there's at least a market where I have a much bigger grasp of the fundamentals and the story narratives and the stories going on, right?
Tell us.
So coming out of the U.S. production season, and for those that may not be aware, right, grain is really only produced in fields around the world but once a year, right? With the exception of double cropping in South America, so corn and soybeans really have, you know, one major harvest every year in the fall. And South America has obviously their opposite harvest, but two major harvests around the world, both of which feed Chinese and Asian demand for soy effectively, and corn and meal too. But point being is that most of this production goes and finds its way into China in some capacity, right? So we have a narrative of coming out of a lower production year for soybeans in the United States. We have very tight carry out. In other words, the stockpile of beans that we have left over after we use everything is going to be pretty small, relatively speaking. The relative pile of corn is much bigger. So we have this supply and demand element in corn and beans that are completely opposite sides of the spectrum. Both still have strong demand, but the supply of corn fills that demand, where the supply of beans could theoretically run out. That demand can be, you know, if the demand walks back because of higher prices, that can change. But obviously, we have not seen, like you pointed out, here over the last couple weeks and months, a big bull market in row crops. In fact, every attempt we've had for, you know, charts like the, let's look at just the soybeans for a second. Jan beans have been in this range from $12.70 to $14 for you know, over a year now. And that range that we're in will probably continue until we find that seasonal bottom, which in theory, and if we take a look at those real quick, see if I have them ready. I think I had them somewhere here. Seasonal soybean chart. Here we go. So this is soybeans over the last 5-6 years plotted out. The average one, which is this neon color, is the one that we're really interested in here. And if soybeans follow the seasonal that typically happens between now and the end of life we're just looking at the March contract right here. You're looking for a rally from about $11.50 up to, you know, $12.95. So there's about a $1.50 rally in the soybeans seasonally this time of year over the last 5 years that we've seen. Most of that was maybe 2022. So if you take out 2022 in this idea, you still have a rally from 11.44 up to about 12.20. So, okay, an 80-cent rally in the beans. That could take us back in the soybeans between now and March back to the high end of that range that we've been in. So again, seasonality on soybeans coupled with, you know, and the blue one here is, of course, this current year. Right.
How about the wheat? What's a carryover in wheat?
So wheat's carryover domestically isn't very tight. Well, it was a lot tighter, for our two hard red winter wheats, sort of spring wheat and the hard red winter. There's two qualities of wheat in the U.S. There's generic wheat, and then there's the hard red winter wheats or hard wheat.
Your wheat chart?
Yeah, and Chicago wheat, which
look at that. That's really come out of the hole.
Really come out of the hole here this last week. And actually one of the biggest rallies we've seen in wheat since, you got to go back to the summer months when we had what we refer to as weather markets, right? During the summer, in these big rallies in wheat, corn, beans, everything had these rallies during the summer when we were in that kind of drought-like condition, right? Fearful of crop loss or fearful of small yields. So the markets were rallying. We got timely rains which beat the market price back down, and a number of other things that affected wheat market, particularly that rising US dollar. But it's interesting that over the last couple weeks, we've been finding a bottom in the wheat market.
The wheat likes the weakening dollar.
Absolutely does. And if you were to overlay those charts, the dollar found its bottom here, on 11.29, right alongside, right, the wheat finding its bottom there on 11.28.29 as well. So the correlation, right, of that dollar and against the gold, against our row crops right now, it's just interesting to see how everything's kind of lining up here going into the end of this year. And
that's
what
really
has been
that's really going to be a problem for the Fed if some of these dollar counts come true, because it's going to make, at least nominally, everything more expensive.
Absolutely.
For us with a weak dollar. So if they're inflation fighters, a weak dollar is going to be a problem for them to fight inflation. It means that they have to raise rates to get the dollar to stabilize.
And speaking of those rates and that exact chart idea for the Fed, right? I have a chart up now, the 30-year note, right? So this is just, for those that aren't aware, the bond market is priced kind of with an inverted pricing scheme. So the higher the bond price goes, it's actually the lower US interest rates are going. And the lower the bond price goes, the higher interest rates are going. So this sell-off you saw in bonds from April of 2020 all the way through
historic.
Now, right. This is a huge rally in price,
50% loss of principal.
Huge, right? And now we've seen it unwind a couple times, a couple rallies within this downtrend, right? All holding some pretty big key trend lines, two steps down, one step up, two steps down, one step up, another two steps down, one step up in this 120 to area of resistance now. Kind of going through a couple of our trend lines. My next big area to look for is up to 129 to 133. That's a really big level to kind of watch. I don't think we'll get all the way up to 149 just yet. But the idea here, folks, is that the dollar falling, coupled with a reversal higher in the bond market, and some of these other commodity charts and markets that are signaling maybe the same thing, are all saying similar things right now, which is, hey, we might have run our course in a very big trend that was based on, effectively the Fed having to raise rates and try to quell all of these commodity price rallies, all of these, right, inflationary pressures. If that's the tool they're using and they're starting to unwind that trade a little bit, well, right, the big question we all as traders have to ask ourselves, are we now entering into that next period of the Fed cycle, right, where we're coming out of a tightening, going into more easing? Are they going to be lowering interest rates? We've got, I think they said 6 different interest rate cuts priced in, now for over the foreseeable future or something like that. So, right, the market is starting to anticipate and feel out the idea that, hey, maybe that rate rising environment is walk back a little bit. And if that's the case, right, the Fed,
maybe that's I heard someone I was talking to yesterday said, really, even though the Mag 7 has acted great, that this is a risk off rally in bonds.
Yeah, we haven't seen.
What do you think of that?
Well, I guess it's how you define risk, because I don't see much of risk off in the S&P right now or in the stock market.
Right.
It's been the rally in bonds. It's impressive how little the bonds had a rally for the stock market to rally.
But why are rates going down? Because the economy is weakening.
Right. You're seeing the jobless, numbers start to perk up. The unemployment claims are perking up, right? You see those reasonings that you think, the fear of a slowing economy. That's a reason why crude oil prices are down a lot. And in fact, it's probably another kind of correlated idea to that idea is,
I mean, they don't have to happen at the same time. They don't have to happen at the same time. In fact, I think traditional stock players, Daniel, believe that the bond market bottoms and performs better in front of a bottom in the stock market, that the stock market doesn't bottom until bonds have been constructive for a while.
Yeah, I think there's some truth to that too, right? Markets anticipate things. They're not, static. They're living, breathing creatures. And another little kind of outside market, live cattle here came off of a wild run up and a huge top we made in September too.
Yeah.
The dollar, right, had, this actually was rallying and face of the dollar didn't matter, but boy, did they unwind that trade. Massively.
I know the steak prices were coming down a little bit.
And we should probably anticipate that price of red meat dropping even further at the grocery store, because this doesn't look like it's done yet. This looks like it's now entrenching in a solid downtrend.
I remember when these prices were ridiculous.
Mm-hmm.
When you had $80, $90 cattle.
Right. And if you look at the continuous chart of cattle real quick, you'll be able to see how 190 cattle was very high. I mean, you go back
only a couple years ago.
The old highs here, people, were 171 in October of 2014. We've been as low as though all the way down here. You can see down to the 80 and 90 and 100 level. Then you got your the March or April of 2020 lows, where everything was at lows. And now we've had this massive run up since COVID. We're just unwinding a very big uptrend at this point in the cattle. And I think that a lot of markets have to reset and unwind after these big moves. I mean, nothing goes in a straight line forever.
All right. I'm saying S&Ps are the same, and it's imminent. Daniel, your stuff is great. And I like the kind of work that you do. Most people just click a button, for their trading. But when you're, talking about these kind of markets that we've talked about, I really think it's important that they have someone to collaborate with. So, if someone wants to set up a commodity account, how they get a hold of you.
Yeah, appreciate that. You can get in touch with me. My number there on the screen, and I can send it in the chat here too, 312-277-0110. Shoot me an email at dhussey@zaner.com. Find me on Facebook and social media at DanSOTD on Facebook and at Daniel Hussey Jr. on Twitter. We're happy to help everybody out. Doesn't matter if you have commodity exposure already or looking to get involved in markets. We help all service and size of accounts out, and glad to talk to you about what your needs and accomplishments in the market might want to be.
You have an account minimum size?
No, we don't. But trading futures and Forex in general, $1,000 to $5,000 on the low end. But we don't have account minimums. Right. Exactly. You can't do it with pocket change. Right. But it's not, the barriers of entry are not as big as they maybe used to be, because there's now minis and micro contracts in the futures, which, at 1/10 the size of a traditional big contract actually, allow for traders, smaller traders and day traders to trade efficiently and effectively.
When I was a broker, Daniel, before someone opened an account, I would say to them, you see that check that you're holding in your hand? I want you to imagine striking a match and lighting it up. And if that makes you nervous, it's not risk capital.
And that's true, right? These are leveraged futures we're talking about. It's all risk capital, unless you're a true hedger, and then you're then you're in risk. Then you're risk management, though. But even then, you're coming at the market from an element of risk management. So conversation.
So it saved me a lot of heartache as a broker.
Sure. And one last thing I'll leave us with here on the S&P 500. I know we've been talking about that chart for a while now. Talked about that Millennial Black Monday.
Tell me we're going to your triangle, 4,400. Tell me we're going there.
I actually think we could. That's kind of the that little bit of a flat I looked at earlier in some other markets. I mean, we could in theory still, I think, make it all the way down to 4,200. But I think the pullback now. I mean, I wouldn't bet on us going there. The pullback in the near term, we start to get below 45, 50 here. These lows the last few days, this little range, right? We get below there. You're unwind this down to 4,400-ish, somewhere in that area, right? That downward sloping trend line now is support, where these two trend lines basically meet, right? That apex of them, the rising trend line against the lows and the one against the highs, test that area out. Make sure you want to stay up here and continue higher. And that's assuming we don't just continue higher in the near term, which I'm not saying this market can't, but you know, this has been a very,
so
very,
you could be
very
short
one-sided
against, I'd say, the high of the week.
I would agree with
Stops
that.
over the high of the week, right?
I agree, because if this market's rolling over, it should, you know, really start to penetrate. We've got a few days down now, lower lows and lower highs. Now, yesterday was an outside day. It was an outside day of the prior
and a
day.
lot of stuff.
We should continue lower. We really shouldn't even get above yesterday's high if we're going to
No,
be
we shouldn't.
continuing
A lot
lower.
of damage yesterday.
Right. Right. And if that
All
gets
right,
unwound,
well,
that's kind of bullish, but we'll see.
Yeah. Yeah. Well, good instinct.
Yep.
You know, trade it small. To be there for the good times, you have to be there all the time.
Absolutely.
And you are, Daniel. Good
Well,
to
thanks for
talk to you,
having me,
buddy.
Dale.
Yeah.
Always a pleasure.
Yeah.
Get my info here into the chat for everybody. And yeah, thanks for having me. Can't wait for the next one.
Enjoy your holidays, Daniel. I'm a fan. I'm rooting for you.
Thanks, Dale. You too.
All right, everyone. So get a hold of Daniel for, you know, if you want to set up a futures account and trade some of these grains. He knows the grains. All right. That's a wrap for me, everyone. Don't just count your bushels or your coins or your oil rigs or your MAGA 7 stocks. That's right. Count those, Sinatra. See everyone tomorrow for the NFP. It'll be no frickin' problem. Get ready. Adios. Oh, join the team in 14 minutes. And that's where you get the good stuff. See ya. You're welcome, Joe.